Hello and welcome to this week's special presentation. My name's Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be providing this week's topic, which is titled Timing the Market, a System That Has Never Failed. You know, it's ironic that everyone on Wall Street says you can't time the market, but all they do is try to predict it. Now, this presentation is not about predicting the market. It's about timing. In other words, reading our indicators and letting them tell us when the market is rising or falling. It's also about sensing turning points and knowing when to invest and when to take defensive actions. I've stolen this quote many times over the years, my time here at VectorVest, and it comes from Gordon Gekko, the infamous and fictional antagonist from the movie Wall Street. And he said, "The most valuable commodity I know of is information." And we've been gifted that commodity again through VectorVest over the last few weeks with Angie's wonderful essays that she's been writing about the trends that we follow, and the special presentations from my friends and colleagues here discussing timing. So it's been a series on the VectorVest market timing systems, the special presentations. If you haven't seen them, I strongly urge you to go back. On April 26th, Glenn Tompkins did a wonderful introduction, the key to navigating market trends. He talked about our most aggressive trend, the primary wave. Okay, did a wonderful job. The following week, Jerry D'Ambrosio came in and did another great informative session on how to identify shifts in market momentum. And he talked about the green light buyer and the green light buyer RT kicker. Did a wonderful job there. Not to be outdone, Mr. Steve Chappell last week did a wonderful video on a prudent approach to navigating market trends. He explained, defined, and showed how to use the DEW timing system in the VectorVest program. And this week, and these are tough acts to follow, but I'm going to talk about the confirmed calls in this presentation, Timing the Market, a System That Has Never Failed. Now, this is walked hand in hand with a wonderful series of essays from Angie Akers, and she wrote about each of those market timing trends in her essays leading up to today's confirmed call. So with that in mind, let's go ahead and jump into definitions, how to use the confirmed call, and the power it can give you in understanding when and how to navigate these trends in the market. Let's begin with some definitions first and foremost. We'll talk about the confirmed call, right? We call it our most conservative. It's a very prudent / conservative market timing trend, okay, compared to something like the primary wave or the green light buyer. Now, a confirmed up signal is given when both of the following occur. Number one, the price. That's the price of the VectorVest Composite when it's increased 5 trading day period over 5 trading day period for 2 consecutive 5 trading day periods. And the price of the VectorVest Composite has increased from the prior day, right? So it's got to go up week over week for 2 consecutive weeks and day over day. Part 2 is the buy-sell ratio. The buy-to-sell ratio has to be greater than 1. A confirmed down is just the mirror image here. It's when both of the following occur. The price of the composite has decreased 5 trading day period over 5 trading day period for 2 consecutive 5 trading day periods. And the price of the composite has also decreased from the prior day. And in this case, the buy-sell ratio is less than 1, would give us that confirmed down call. So that's the VectorVest Composite price and the buy-to-sell ratio. Let me just quickly define those two indicators, and then we'll move on and jump into the program. So the price of the VectorVest Composite, what is it? It's an arithmetic index of the price of the stocks that make up the VectorVest Composite, over 9,200 stocks currently. The purpose is to portray the overall market as a whole, right? We have the Dow with 30 stocks, the S&P 500, you have the NASDAQ and the Russell 2000. What the VectorVest Composite does is take that overall market, so it's just a broader indication of, again, over 9,200 stocks that we currently track in our U.S. database. And the function, of course, is to display the overall direction of the market. Next is the buy-to-sell ratio. Again, the definition here is simply the ratio of buy-to-sell ratings of all the stocks in the database. And I'll talk about that on the home page in just a moment. The purpose indicates the internal composition of the market, right? How many stocks are taking part in any up or down trend. And then the function signals the overall strength, or that underlying strength of a rally or a retreat in the market. Finally, quickly, why it's so important, the recommendation profile, as it's referred to as well. It's very important because there are some strict variables that go into giving these stocks a buy, sell, or hold rating. So let's talk about it. How does a stock in the VectorVest program become a sell? Well, it simply falls below its stop price, which is the 13-week moving average that's adjusted for the fundamentals of the stock. Falls below that number, becomes a sell-rated stock. To become a buy, number one, the price, of course, has to be greater than the stop price. The value safety timing, or the VST indicator on that 0 to 2 scale, has to be above 1. Number three, relative timing on that 0 to 2 scale has to be above 1. And number four, the price must be diverging away from the stop price. Okay, so it's not all that easy to get a buy rating in the VectorVest program. And so when we see that buy to sell ratio strengthening, we know it's a good sign of the underlying strength. And then vice versa, if the sells start to take over, we know there's that underlying weakness that we see in the overall market. And then finally, a hold, the price is greater than stop, but any of the other three factors needed to receive a buy are not met, and the stock will get a hold rating. Okay, so that's just a quick introduction for some of the definitions of what we're talking about. Let's go ahead and jump into the program. I'll take us into the home page, and it all begins here in the color guard, where our market timing gauge barometer needle are, the color guard, VectorVest at a glance, right? Hopefully you watch our daily color guard reports, our Friday night timing sessions. We start always in the upper left-hand corner. We talk about the major indexes along with the VectorVest Composite. Our market timing gauge barometer needle currently is 2 ticks into the green, tells us the color guard is somewhat bullish, and that also tells us that we have 2 green lights in the color guard as of today's close. So when we look at the price here, we see the composite price currently trading at 66.77. And when we look at it, we know it is higher than it was 1 trading week ago. And so as Glenn talked about in his presentation, that's our primary trend. It's up because the composite's up week over week. But we have a yellow light. Why? Because we're not up day over day. Come over to we talk about RT, the relative timing, the movement of the stock, but I want to focus on the buy-sell ratio. Again, we see it's above 1, right, at 1.25 as we speak. And we also see here in the color guard that we got our confirmed call at the close of trading on May the 14th. What I want to do is click on this wrench here, and it allows me to extend the color guard view here. So I can show you here. I'm also going to show you on the graph in just a moment how the confirmed call is indicated. So we got it on May 14th. All I have to do is count back 5 trading days, right? The market has to go up 5 trading day period for 2 consecutive periods. 1, 2, 3, 4, 5. I know that the composite was up on a week-over-week basis leading up to the 14th. I also know it was up the prior 5 trading days as well. Why? Because the trend here on May the 7th was also up, which means it was up week over week to the 7th, and then to the 14th, it was also up week over week. So that's 2 consecutive 5 trading day periods. Not only that, but the composite went up day over day from 65.94 when we round it up to 66.34 when we round that one. That's how we closed with the confirmed up, and because the buy-sell ratio clearly closed above 1. And that's how we get our confirmed up call. We say the confirmed up call, as I'll illustrate in some graphs in a moment, as the title of the presentation suggests, it's a market timing system that has never missed a major market move. And it never will, simply based on the way it's designed. Now, when we talk about the buy-sell ratio, just real quick, we're looking at, again, 9,278 stocks that we're tracking. Each and every day, those stocks get that buy, sell, or hold rating. We take the number of buys, we divide it by the number of sells, and it gives us that ratio. Now, this one is not on a 0 to 2 scale, so this can continue to rise or fall, right? In this roughly 3-week trading period, we see it was as low as 0.36, meaning there were a lot more sell-rated stocks than buys. But now we see 22.5% of the stocks within the database are currently buys versus the 17.8%. And as far as the buy-sell ratio go, holds are not included in that equation. So that's what we're looking at. Two very important pieces of information, right? The movement and price of the overall, a very broad market using the VectorVest Composite, and that underlying strength or weakness using some very strict parameters and indicators to give us a buy or sell rating or a hold rating on those underlying stocks. Okay, from here I'm going to go up to the Graphs tab, and I'm going to start with just, I have a few different market timing graphs set up for us that I want to illustrate. I want to start here in we'll go to a 1 year look back. Okay, and I have the basic MTI layout set up here in the graphs. And let's talk about indicators in graph form. So the buy-sell ratio I have down below. I've taken off for now. I've taken off MTI and the RT indicator for now. We know we got our confirmed up, again, just on a couple of days ago on May the 14th. If I zoom in here a bit, we'll see exactly how we got there. So this is just graph form of what I just showed on the home page. 1, 2, 3, 4, 5. Composites up week over week. 1, 2, 3, 4, 5 for 2 consecutive weeks, right? Not only that, it was up day over day. And then down below, we can see in the buy-sell ratio, as it comes from its lows, as the market rose, so too did the buy-sell ratio finally getting above 1. And that is what gave us our confirmed up call. So that's what it looks like when you're looking at the graph, how we receive that confirmed call to the upside. This 1 year graph is actually great to show the power of the confirmed call, right? I'm going to go back and show some historic movements in the market, but it's great because this 1 year graph really does a lot for me. We got a confirmed down call on August 9th of 2023, and it took us all the way into 11/24 of 23 when we finally got the confirmed up call. So we saw the market was rising. We had some whipsaw here, which again is possible. We're not predicting. This is based mathematical formulas that are based on the movement of the market. So sometimes we will see, especially in a volatile market like we've had for a couple of years now, where the market is driven by a lot of headlines and a lot of macro things that are going on. But you can see here we got the confirmed down again back on August the 9th. And this is just a 1 year look back. The confirmed call has never missed a major market move, and it never will. I would consider this a pretty big move to the downside, right? The composite hit its low here in late October, and then we got our confirmed up on November 24th to the upside. Again, another major market move that we saw, and yes, we did have a little bit of a whipsaw here. With those in mind, let me just try to reiterate, and Steve did a wonderful job last week of pointing this out. Follow through is extremely important when we're looking at market timing. We get a confirmed call signal. What we need, it's an end of day signal. It's not confirmed till the end of the day. And so what we want to see is the follow through the next day. And this could work on both up and down situations. So if I zoom in here, we got a confirmed down at the close on 318. That might tell you to take defensive actions, close some positions, tighten stops, and you should always be considering that, right? Selling covered calls, buying protective puts. There's a lot of defensive measures you can take. But Steve just pinpointed it last week. The following morning, composite actually went up, had a very strong day, and another day followed that. So with the end of day indicator, had you not waited, you might have gotten rid of your positions here, or, listen, buying protective puts is always a good idea for insurance, but the follow through is key here. So you may have taken no action and have been able to take advantage of that up move, and when it pauses, right, the confirmed call is going to come back again and get you out at the right time, or at least defensive. Doesn't necessarily mean you have to sell every position you own, but it's going to make you become more defensive in your portfolio. So again, just this 1 year look gives us a great indication of how to do that. Let me walk through some historical moments. Again, when we talk about never missing the major market move, And yeah, I'm going to go back in time a little bit because this indicator has been around for over 25 years. I could go to dozens and dozens of these. But remember November of 2007, it was the same week Dr. D wrote his classic essay talking about the beginning, the entree into an extended bear market. And we saw what happened all the way down to April of '08. That was a significant major move in the market, and the VectorVest program had you defensive or out of the market that entire time. So there's one time that we're looking at. I can go back to 2008, so kind of along with that financial crisis that we were going through in 2008, major market moves. The VectorVest Composite is telling us using the confirmed calls. Here's another indication of what Steve talked about. We got it confirmed up. Right? The markets tried to rally, maybe some short covering, who knows? But what happened? We got a confirmed up call, but we never had the follow through. Right? Once again, we never had the follow through there. Right? So that's what we're looking at when we're using the confirmed calls. Then, of course, the March of '09, another classic essay when Dr. D said, this is the beginning, right, of time to jump back in. I can take us to some other ones as well. Here's one from November 22nd, a little more recent, 2021. We peaked there. Remember, in October, we got the confirmed down, another huge move in the market. And this is one that I experienced in our retirement coaching group with our model portfolio using ruler stocks. This was, the perfect example, once again, of what Steve commented on last week. We got a confirmed up call. In our retirement coaching group portfolio, the portfolio manager automatically populated the next morning with 10 positions in the portfolio. And what happened? In the real world, we would have waited for follow through and never got it. We never got the follow through that we were looking for. And the market really turned down and struggled right up until right around that bottom that we finally saw in October of 2022. And then the market ran again. So these are the indicators, again, just a visual of how these indicators are working. And then finally on that downtrend on November 24th of 23, the market had another major move to the upside. And now we'll see where we are now. Right? We got it just a few days ago. The macro news headlines are still going to keep this market volatile, but the confirmed call has been a staple in the VectorVest market timing trends. And once again, the ability to understand, starting from the primary wave right up through the green light buyer, the RT kicker, the DEW, and being able to adjust depending on your investment style, right? Your objectives, your profile, and how you invest, okay, is going to have be a big factor in how you apply the market timing trends. I want to take a moment and go up to the Viewers tab along the main toolbar here, and I have the Trading System Viewer up. And again, you can sort the Trading System Viewer in many ways, what category you want, whether you're aggressive or prudent or conservative, and you can set the market timing trends here as well. And when we sort them by market timing, we can take a look at the confirmed calls. Listen, the confirmed call doesn't necessarily mean the type of stocks or your investment style has to be considered conservative, right? We have some aggressive type of trading, what we categorize them as, prudent ruler stocks. These have worked really well over the last year or so. This is the 1 year, 3 month, 1 month look at these. Blue chip dividend payers uses confirmed calls. It has some great stocks that come in there. And what's also great about this is looking at these investment plans or these trading systems. What I love about them is the 1 year drawdown numbers are really good. Now, one of those is, which one is that? That's Russell 2000 and Vern's Vultures. So that's using shorting strategies as well. So a little really more aggressive, more active. But you can see on the more conservative type ruler stocks and blue chip dividend type stocks, the drawdown is really good. Love to see that. You can see, again, ruler stocks up top here and some of the other very nicely performing strategies that we're using. And then finally, what I want to do is I went into the back tester. I didn't do some deep dive into, time frames and creative stop criteria or whatever. All I did was I went back a year and I used ruler stocks. I used rec equals sell for my stop criteria. I use confirm calls, and when the confirm call goes to down, we would go to cash. Okay, using just regular ruler stock search. The reason I'm showing this is because I wanted to illustrate the power again of the confirm call. Now, whether you go to cash, it's difficult for everyone to sell every position they have just because we have a confirmed down call. There are some, I'm sure, that if you haven't owned for a long time, you could always sell the stock. You can tighten the stop, sell covered calls, buy protective puts. So all of those things are possible and things you should consider. But what I wanted to show simply bringing this up is nothing more than the power of knowing when the confirmed call is to the downside, right? This stretch in 2023 was a fairly significant move to the downside right up until November of 23 when we got the confirmed up call. What happens? We go back into the market. It tells us it's time to invest. We navigate that downtrend. We know when to get back in. Now, again, if you're using the primary wave or green light buyer or DEW, you would have gotten in prior to this even. There's nothing wrong with incrementally building your portfolio on a primary trend up or a green light buyer RT kicker. Doesn't mean you have to fully invest at that time. You can invest right up to the confirmed call and become fully invested then. But what happened was a major market move. The market has moved very nicely, went into cash for a short period, and then again, missed out on that drawdown that we saw, and now we're back in. So that's about as basic as you can get in managing your risk on a portfolio. And over the last year, we've had ups and downs, but this portfolio, 39%, we'll call it, with 11.5% drawdown. But really, the reason I'm showing this is just to illustrate the power of understanding when to invest, when to take defensive measures during these stretches where the market is really working against us. Keeping in mind the follow through once that confirmed call comes, that's a great time to be able to do that. And then one last look again, just to really just emphasize one more time, that March 29th of 2022, it sticks in my mind because of what happened in our coaching group. Remember, the follow through is so important on any of these indicators that we use, whether it's the DEW, green light buyer, primary trend, whatever it might be. Just remember to look for that follow through. And this is a real world example of how important that is. So once you've determined your objective, your investment profile, aggressive, prudent, conservative, make sure that you follow these market trends, these indicators that navigate you through this up and down movements. And remember also that the confirm call is a system that has never missed a major market move, and it never will. Thank you for taking the time, and I look forward to seeing you next time.